Nacy Palosi, one of the best traders in the world, just invested $1 million into NVDA Corporation. Today, we're going to build a strategy that auto-invests for us and hopefully beats her trade. The strategy I built today turns $10,000 into $5.6 million over a 6-year period. It has an annualized return rate of 164% and a max drawdown of 58%, which is actually only a little bit worse than NVIDIA. And I also made a much less aggressive strategy, which would have netted a $300,000 return off of a $10,000 investment since 2016, but we'll get into that. But let's roll the clip.
Welcome back, everybody. Time for the Hot Topic Buzz. Nacy Palosi denying accusations of insider trading after financial disclosures showed that her husband bought as much as $5 million in computer chip stock, NVIDIA, ahead of this week's vote on a bill that would deliver billions of dollars in subsidies to the chip manufacturing industry.
Shocking, I know. And after thinking long and hard about what to call this strategy, I think I've come up with the perfect name. We're calling this strategy Inside Nacy Pelosi's Chips.
Give it to me like I want it.
Nope.
Version 3. This video is not getting monetized. So I'm going to start off by kind of explaining the high view of this strategy if you're brand new to investing or don't know much about investing. So you're probably familiar with the S&P 500 or the NASDAQ, just the US stock market. Well, inside the US stock market, there is actually 11 sectors, and they are split up, and I'll show them to you in a second. And then inside each sector, there are industries. So the stocks that we're investing in this strategy are NVIDIA and AMD, which are inside semiconductors. If you're not familiar with the companies, they essentially make chips. I'm sure you're probably familiar with like the chip shortage of cars and stuff in automotive manufacturing. Well, these companies produce the technology and hardware for computational, artificial intelligence, computer-aided design, video games, car manufacturing. Pretty much anything that needs processing power is made by predominantly these two companies, as well as Intel, but we're not going to talk about them today. And they're also heavily used inside of cryptocurrency mining rigs. So this industry is kind of the backbone of a lot of the growth in technology and in our world today. It's a huge industry. Now, if we hop over to the Miro board, you'll see I put in here the 11 sectors of the US stock market, which you can see here, and the one that we are working on today is information technology. And then if you click this link, it'll actually take you to Fidelity.com, which will walk you through all of the different industries inside of that sector. And then we can see here semiconductors and semiconductor equipment, which is what we're going to be working with today. Before we begin, when you check out the Miro board, there'll be 3 videos here that you can watch. I highly recommend you do. The first one is the Fox one. The second one is a mini documentary on the founder of NVIDIA and kind of tells you the backstory of the company and its technology. I highly recommend that you watch that video if you want to learn more. I'm actually a gamer. I've been familiar with NVIDIA and AMD and chipsets since I was like 10 years old, but I watched this video and I still learned a tremendous amount about the company and its technology that I was not aware of. And then last video is actually from Linus Tech Tips, if you're a tech person or not, kind of talking about their current short-term over orders. If you know what the bullwhip effect is in economics, then you're familiar with it. But if we hop into the charts here, we can see NVIDIA has come down quite a bit and is looking to roll over here on the short term. So let's hop into the strategy. Okay, so I went ahead and drew out the strategy on the visual board for Miro, just so it makes a bit more sense. And it really works in kind of 3 parts. The first one is a mean reversion check, which I'll explain what that is in a second. And if you've watched some previous episodes, you've actually seen me use this. I just haven't explained what a mean reversion strategy is. Then it moves into a bullish mean reversion check. So we'll get to that in a second. And then finally, it moves to checking AMD and NVIDIA specifically, which are the industry leaders. So what is a mean reversion strategy? Well, the best way I can explain it, first, if you know what RSI is, Relative Strength Index, that's essentially a mean reversion. But for everybody that doesn't know what that is, imagine you have a rubber band attached to a pencil, and then you let go of it and it snaps and it swings back this way. Well, in investing, you don't know if the rubber band is how far it's going to go specifically, but you know at some point it's eventually going to snap back and go this way. And a mean reversion strategy essentially works on that theory, where it says if a stock is moving at this rate for a certain period of time If it overextends itself, there's a high chance that it's going to snap back to its mean or its average. And then vice versa, when it's coming down and it is overextended beyond its regular movement, it's going to snap back and come back up. So over time, you see a stock will actually oscillate back and forth around its average movement. So what we do is essentially build a strategy that kind of captures those explosive volatile moments to gain more profit. And that's how we get the 2 million or 5 million returns on this type of strategy versus the regular. So let's go ahead and look at the first part of the strategy. What we're looking at is SOXX, which is a semiconductor ETF. I actually put a list down here of all the ETFs and stuff that's used in this strategy, so if you want to check them out. Actually, I need to add a few more, but those are the main ones. And then what we're looking at is the 5-day cumulative returns of the semiconductor index. So we're looking at every company essentially inside of semiconductors, and we're measuring to see what the overall market's doing. And then if we go over to our charts real quick, and I just type in SOXX, this is the overall semiconductor industry over the past 10 years or so, and currently we've been on this big downtrend. But as you can see, this drawn out, the first thing we check is the 5-day cumulative returns of SOX. If it is greater than 5%, which means that we're on a bullish up run, it is going to move to this, and it's going to check the 1-day returns of SOX, and it's looking for, if the day is less than 2% drop, it's going to buy a long position. So hopefully you can visualize that. If we are on a 5-day uptrend, and then for some reason the market drops more than 2% in a 1-day period, it's actually going to buy SOXL, which is a 3x bullish version of the same ETF, and it's going to essentially buy the dip. So the overall market is moving up, but we drop 2%. It's going to buy a 3x version, long version of that, and it's predicting that it's going to snap back into place, and we're going to profit off of that. The next thing it's going to look at is if it's less than 2%, but it's over 5%, it's actually going to buy a short position because it is anticipating that we've overextended a bit, and it's going to come back down on a SOXS, which is a 3x bearish version. So that is the first part of the strategy, which is the bullish mean reversion. Now we are going to look at the bearish mean reversion, which essentially is the exact same thing but in reverse. So if we open this up, it will look at the 5-day cumulative returns. If they are less than 5%, which means the market is moving down, and the 1-day cumulative returns are greater than 2%, then it's going to buy SOXS, which is the short version of the ETF. Just so you can kind of see that visually, what we're looking at is the overall market is moving down on a 5-day period, but for some reason it bounces up and it regains like 2%. Well, the theory is it's going to snap back down to that declining point, and we're going to capture profit by taking a short position on that movement. Now, if it's not snap back up 2% or more, then it's actually going to take a long position, SOXL, and it's going to go bullish. So the next part of the strategy is really just a mirror image. We're looking at AMD and NVDA individually, but they are the exact same copy and paste. So we're just going to look at one, and we will check out NVIDIA. So the first thing we're doing is we're actually looking at another mean reversion strategy, but we're going to be using RSI instead of cumulative returns. If you go over to the strategy, you notice that the first thing we used was 5-day cumulative returns. Well, now we are actually going to look at the RSI. So I'm going to open up NVIDIA, and I'll just kind of make this a little smaller so it's easier to see. So we're looking at the 8-day relative strength index of NVIDIA is greater than 90. Now, if we go over to the NVIDIA chart, you can see here at the bottom, this is the RSI. I've set it so that the white line here is at 90, and every time the market ticks above 90, we're essentially going to take a short position on NVIDIA. And we're going to take the SOXS 3x bearish version of the market. So essentially we're taking a short position 1 day down on that. So it's just another version of mean reversion, but we're specifically looking at NVIDIA instead of SOXX, which is the overall industry ETF. Now, if NVIDIA is below the 90, then we're going to move down to the next part of the strategy, which is going to look at the 3-day RSI, and if it's less than 15, we're going to take a long version. And if we hop over to the chart and I just switch my thing to RSI here, and I'm going to switch the lower band to 15, you can see this lower band here. If I turn up the brightness to white, anytime we touch this lower band down here, we're actually going to take a 3x long position on NVIDIA, and essentially we're buying the dip. So I hope you understand mean reversion a little bit better with that. If you have any questions, feel free to leave them in the comments. You can also send me a DM on Instagram. I'm most active there, but I will answer any questions that I can for you guys. Now, finally, we are at the last part of the strategy, which is actually a move average. So we're looking at the 10-day exponential move average on the SOX. So we're looking back at the ETF, not the actual NVIDIA. So we're looking at the overall sector. If the overall sector 10-day exponential move average, I know this is a lot, is greater than the 200-day EMA, we're going to go bullish. And if we open this up, you'll see there's a sort function here, and we're just kind of sorting between SOX, NVIDIA, AMD, and then I also put XLE, which is an energy sector. It's kind of uncorrelated, but allows a little bit more balance in the strategy. And then ENPH, which is a smaller cap stock inside semiconductors, but it seems to be pretty good so far from what I've seen. So essentially, let's hop over to the chart so you can see it a little bit better. And I actually drew it visualized. So if I hide this, pretty much anytime we see the gray here, we are going to be bullish. So the strategy will be running this sort function. And then anytime the chart is actually bearish, like here, where we're below the 200, this black line is the 200 EMA, we are essentially bearish. And then we switch to this sort function down here, which is just going to rotate between the SPY, DBC, which is Commodities Index, and also XLE, which is energy sector. So we're essentially just rotating based on what the overall sector is doing. And that's pretty much the entire strategy. And then all I did was copy and pasted the NVIDIA section, and I basically just duplicated the same thing and added it to AMD. And this is the whole strategy, which netted $5.8 million over a 6-year period and has a 164% annualized return. So let's go ahead and take a look at the other simple strategy that I built. And I actually added one function to it. The first original part was like $400,000, $600,000 returns. I actually got it up to 2.3 million using a volatility catcher. So at the very beginning, we look at the 40-day RSI of VIXM, which if you haven't seen my other videos, you should go check them out. But let me pull up a chart real quick. So this is VIXM, and this is essentially volatility. So this checks and measures the fear in the market. And anytime we have a black swan event or a massive market crash, this will actually turn on, and as you can see, it captures profit above 69 RSI on the 40-day. So this section right here, it actually captures profit. You can tweak that and actually make it more efficient, but this is just a very simple, if VIXM is above that, it means that we're in a black swan event and the market is crashing, and we should take profits on that. And then you can roll back and see that most of the time it stays under that unless we have like a COVID level event. Then it just goes to a rotator, which rotates and sorts between the 90-day move average returns of these companies and ETFs. So we have SOXX, which is the semiconductor, NVIDIA, AMD, and then the SPY overall stock market, and then it rotates to DBC, which is commodities if everything else is crashing, and then it'll rotate as well to XLE, which is energy, or the smaller semiconductor company I found, ENPH, which begs the question, I might go through the semiconductor company list and see if I can find other companies similar to ENPH, because these small companies have a greater potential for growth because they're the small dogs. So if you imagine NVIDIA, which is a massive company, I think AMD is like 1/10 the size of NVIDIA, so it has room to grow. That's why AMD typically returns more than NVIDIA. But then you've got these really tiny companies that are like ENPH who have a massive potential to grow, and their returns are actually much, much better. But yeah, typically these smaller companies can return a lot better because they have a lot more room to grow. And the total return on this simple strategy was $2.3 million. Huge standard deviation, 50% drawdown, which is pretty high, but 129% and a 2.54 Calmer ratio. So you can also use this strategy if you want to. So I hope you guys enjoyed this video. Again, if you have any questions, hit me up on Instagram or leave a comment. Feel free to share these videos because it helps me grow the channel. I have been trying to advertise and promote my channel, but for some reason, YouTube does not like my content. And I'm assuming that making a strategy about Nacy Palosi insider trading probably will get flagged. If you guys have any requests or anything that you would like to see, like me build a strategy over, feel free to leave a comment. Whichever one gets the most upvotes, I will check out and see if I can build something for it.